Hello, hello. Now let's continue with our second video about the CPR, the Central Pivot Range. Last video, if you were lucky and were paying attention, I gave away a big tip that not a lot of people, it's a very underrated and unknown phenomenon, the magnet trade that happens with the central pivot and the pivot range. Primarily because a lot of things tend to happen. I believe, in my opinion, I'm not going to go into the logistics or the theories of why I think it always works. It's a combination of trader behavior, switching time frames between traders, reversion algorithms and bots, and people who have had successful trades closing their trades all at the same time, which just generally makes it happen. These pivot retraces. But that would explain a daily behavior, and that doesn't fully explain why it happens on the monthly and the yearly, because people don't always trade in the same manner, yet it still seems to happen. So there's something deep in the algorithms among all the markets where this just happens. But aside from that, the Camarilla pivot range is a very useful thing for many other reasons, besides having that magnet to trade to or to know where to buy and where to sell at. It is a trend following indicator. Yes, just like your moving averages, whatever you use. This can be the same. Here's an example. The price is trending, testing above the pivot, the daily pivot range. You're buying the dips at the pivot. You're taking profit probably on the H3 or the higher targets, right? And you're just buying the pivots until it doesn't work. Same when you have a downtrending market. Here, price broke below and tested from below and rejected. So you're shorting at the pivot. And you're taking profit probably on the L3 or to L5 areas. Just keep doing that until proven otherwise. And when this happens, you don't need to use the H4 or L4 as your stop losses. You can generally, if you notice, get away with just using a stop loss just on the other side of the pivot range, right? So if you're just buying on the pivots here, and usually you'll find the L3 or H3 is with the CPR, and you want a tight stop, you don't need to put your stop all the way so far away. If you want a tight stop, you can generally put it just right on the other side of that pivot range, especially if you're trend following with the CPR. Because the CPR, if I had to pick a metaphor or a comparison, a way to explain it, I would say it is the line in the sand between bulls and bears, the tug-of-war place. When the price is above it, price action is bullish, more bullish, right? When price is above the CPR and the bulls have the ball in their court, they're winning the tug-of-war. When the price is below the CPR, it's the reverse, right? The bears have control. Or the bears have the cards, or it's a trap. Could be all of those things, right? Another thing you can use the CPR for is to give you some extra confirmation if you want to take those Camarilla reversal or breakout trades. Well, one thing, if you see a wide pivot range, it is the wider the pivot range, like this here, is an indication of more possibly a ranging day, a ranging market day, right? See here? It's a ranging, not a lot of big breaks here, but as the range gets narrow, the price is more likely to break out. When you see narrow CPRs like this, that's when price can really get away from the central pivot range. Even this one, it went way up, but still ended up way down. We have a wide range. It looks like a big hunt right there. So here, you see, it's wide, It's more narrow, narrow, and finally it's really narrow. It just breaks out, right? And then you have price discovery and a new trending move. And that's generally how it goes. You have expansion, consolidation, break, and then you have more expansion. So if you are looking to trade reversals or a range L3 to H3 and your CPR looks like this or like this, don't. You might be stepping right into a breakout move. If you're looking for a huge breakout play on wide ranges like this, consider maybe L3 to H3 trades. You're probably going to be able to find one or two of them in those days, at least before it moves. So it's the width and how narrow the CPR is very helpful. Another thing that's helpful is the 2-day relationship between the ranges. You'll notice here, each CPR higher than the one before it. It means the value area, the auction for the asset, it's going up, it's increasing. And then you're going to notice that increase starts to slow down, right? Because price is getting exhausted, it's getting overbought until a point where here you have a side by side value, and it's thinner, it's narrow, it's not higher. This could mean price is about to go sideways and consolidate, or even reverse. And in this case, it was a reverse, but it's not always. Here's an example. You have side by side, right? Inside values, just nothing's doing, right? This is a flat market. But you'll notice if the pivot range is slightly increasing day by day, that could be more than just flat. If it's trending like above the CPR and it's getting more narrow and it's just slightly higher up each time, that could be a sign of accumulation, and you could be looking forward to a breakout play. All right, so here you have a whole lot of flatness, right? So there's not a lot of big indication for what to do here. So knowing that, you can just trade your Camarilla pivot levels. You see the CPR is not saying that with your next daily levels or your current levels compared to the day before, it's not saying we're in a big trending move. It's not saying that, it's not spelling doom. It's not spelling anything. So these is another second confluence to tell you maybe trading the range in Camarilla is okay. H3 to L3. It's helpful like that. And then when the price starts moving, you start getting new higher value or lower value relationships, and then you can start to do something different. Here's another one of those, slightly higher, consolidating to higher value. Push comes to shove, it's got to go one way or another, it breaks out. When you have all of this consolidation, all of these tight levels, and then it just starts pushing one way ever so slightly, this could be all consolidation. Or not consolidation, it could be accumulation. A lot of accumulation until finally a big move. When you have more of these CPR ranges side by side, it shows a longer accumulation, which leads to a bigger move, which we have generally just had right now. All right. So, and in the Pivot Boss book, there's a whole graph showing you all the different types of 2-day relationships. And they go into great detail. I don't use them all. They have the lower value, higher value, inside value, inside narrow range. There's in the pinned messages in the Telegram group, there's a book with the chapter all about the 2-day relationships. That is also very helpful. Feel free to check it out. So those are some things to know about the CPR.